Hello, you are welcome to this lesson. We are still on the topic, the principles of double entry bookkeeping and the trial balance. Having looked at sales revenue and purchases, let us now look at other income and other expenses. So, when we talk about other income, we are referring to those subsidiary incomes that are earned by businesses. Okay? Now, they follow the same double entry principle as sales. Example of such income include discount received. Now, this is where we receive some allowance from our supplier for paying our debt on time. Okay? So this income is received so that it will encourage or motivate us to pay our debt on time to our suppliers. Okay? So whenever we receive such income, it is other income. Now, commission received. Okay? We may receive commission for performing certain activities on behalf of another business. Okay, so commission received is another type of income that a business may realize. Then we also have interest from investment. A business organization may invest in another entity or may earn interest from the monies they have deposited at bank. Okay, so the monies in their bank account, they may earn interest on that. So we can refer to this as interest from investment. And when this interest is earned, we must recognize it in the books of account. So as we have already established, we credit all income. Okay, whenever we receive the cash for the income, we credit that particular income account. So the double entry is we will debit the income, we will debit the cash or bank account. And credit the income account. With the amount of cash received. Okay, so this is how we go about this. Now let's talk about other expenses. Okay, expenses other than purchases for trading business. Now, when we talk about expenses, we are referring to those reduction in the resources of a business which are associated with sales. Okay, so in the process of selling goods, we may incur certain expenses apart from purchases, and these expenses are very necessary to be incurred for the business to operate effectively and efficiently. There are so many expenses. I will list some of them on the board and we'll look at how the double entry recording is done. So refer to that as operating expenses, okay, in the process of undertaking business activities. Some of these expenses are incurred. Okay, so these are just a few of such expenses, okay, operating expenses. Rent, a business may need to rent a premises or warehouse, okay? So the warehouse may keep goods and may also rent shop, okay? Then we have electricity, which is power. We need light in almost every business. We use light for everything. So electricity is part of the expenses we may incur. Insurance, businesses insure their properties, including the fixed assets and the stock, okay, or the goods available for sale. We insure them, and it involves money. So we incur these expenses as well. Advertisement. Businesses that do not advertise find it difficult to get customers, okay? So to enhance your publicity, we must advertise so that we will create awareness among the general public that a company like this or business like this exists and the product within. So we have depreciation. This simply refers to the reduction in the value of the fixed asset due to usage. Okay, we will talk about depreciation, but generally, when we talk about depreciation, we are spreading the costs of a particular fixed asset over its estimated useful life. Okay, so that is also recognized as expenses. Then we may talk about discount allowed. As we deal with our customers, we sometimes sell to them on credit basis. So when we sell to them on credit basis, discount allowed is given. It's an allowance given to those debtors who pay their debt on time. So if our customer is able to pay their debt on time, they may benefit from this kind of discount, reduction in the amount they are supposed to pay to us. So these are some few expenses we can talk about, okay? And as we have established, we debit all expenses. All expenses must be debited, okay? So the corresponding entry may be cash or bank. When we pay for an expense, we have to credit our cash account or bank account and then debit the expenses account. So the double entry for this is okay. So we debit the expenses account in the name of cash or bank, and we credit the cash or the bank account in the name of expenses. So let's now take one simple illustration and see how the recording will be done in the ledger. Let's now look at this illustration on the board. Enter the following transactions in the books of Kalu for the month of March 2019. March 1, received interest from investment by cash, 10,000 Ghana cedis. 3rd March, received commission by cash, 4,000 Ghana cedis. 7th, paid electricity bill, 300 Ghana cedis cash. 10th, paid insurance premium by cash, 150 Ghana cedis. Then we have paid motor expenses by cash, 200 Ghana cedis, okay? So let's look at these transactions. The first transaction is March 1, received interest from investment by cash. So the two accounts that will be affected here are cash account and investment income, okay? So the interest from investment, let's simply refer to that as investment income. Okay, you will not be right if you still write interest from investment. So let's begin. So the heading is in the books of Kalu. In Kalu's books, this is what we have found. So we write in the books of Kalu. Then we open the account for cash. Then we open account for investment income. Okay, so the transaction is recorded at the debit side of the cash account, and the corresponding account is investment account, and it's recorded at the credit side. Note, all income must be credited. Okay, so cash, the date is 1st of March, and the corresponding account is investment income. The amount is 10,000. And when we come here, we will credit investment income account, okay? So we say cash. The date is March, and it is cash we are receiving, 10,000. Okay, so let's move on and look at the second transaction, which is receive commission by cash. So we have cash account already. Cash is involved here, and commission received. So let's write commission received account. Okay, so we debit the cash account because we are receiving cash. The date is 3rd. It's from commission received. The amount involved is 4,000. And we write that. Then we come to commission received. It is income account. We credit it. Okay, so this is how we go about it. The next one is paid electricity bill, 300 Ghana cedis cash. What is that? Yes, that is an expense. So let's look at how that expense will be recorded. And there is cash involved. So we are paying electricity bill with cash of 300 Ghana cedis. So the cash account will be affected, and electricity account will also be affected. So we open electricity account. Okay, so cash is paid. When cash is paid, we credit the cash book, and it's electricity, so we debit electricity. Do not forget, we have said that we debit all expenses. Electricity is an expense, so we debit it. The date is 7th, and it is cash we have used to pay the electricity. The amount involved is 300. Then we go to the cash book. The corresponding account is cash. So electricity, the amount is 300. Okay, let's look at the next transaction. The next transaction, paid insurance premium by cash. Insurance premium, it is an expense. Insurance is an expense, okay? So insurance premium account must be opened. So we say insurance account. As we do to all expenses, we debit it. The date is 10th, and it is cash. The amount is 150. So we come to the cash account, which is the corresponding account. The date is 10, and it is insurance. Amount 150. Okay. Now let us look at the last transaction. Paid motor expenses by cash, 200. It is an expense, so we know what to do. So let's write motor expenses. The date is 12. And it is involving cash. It's about cash. So we debit the motor expenses account and we credit cash account. The amount is 200. Okay, so this is how recording of cash in the expenses and income account is done. Okay, so we can see clearly that all expenses on the board include electricity, insurance, and motor expenses. All of these accounts have been debited with the amount of cash paid for them. Okay. Then, when you come here, we have income, which is the investment income or interest from investment. And we also have commission received. We have received commission and we open an account for commission received. So this is how the double entry is done for income and expenses. Now, let's look at how the accounts are closed at the end of the year and how they are balanced off. It is very important for us to know this and use the balances to extract the trial balance. Okay, so let us look at how accounts are closed. You will take another illustration and use that to balance off all the accounts we may get.